With regard to the non-performing loans, we have seen a slight increase this year. There had been a deceleration from about October to December, but we have seen in the first few months of this year, the non-performing loans have increased to about 15.7. The banks are provisioning for these non-performing loans, and they are sufficiently provisioning for those non-performing loans. Their banks are also making profits, and generally speaking, the stability of the financial system of the banking sector is fairly solid. The capital adequacy ratios are very high; they're almost at 19%,
Right.
compared to the legal requirement or statutory requirement of 14.5. And also the liquidity. We have a liquidity requirement of 20%, but we have really the average for the banking system is about now 53%. So from that perspective, the banking sector is fairly stable. Going forward, as I said, we expect the economy to accelerate. We expect also the manufacturing sector to do much better than it did last year. Last year it grew by 2%. This year we expect at least 3%. And I think that growth rate should ultimately result in a reduction in the non-performing loans going forward.
When we spoke last year in Marrakesh during the annual meetings of the IMF and the World Bank, you mentioned there's a range of reforms that the central bank had done to the FX market. Now that we're getting close to the end of the first half of the year, are you comfortable with the FX market is working, with the Kenyan currency holding steady around 130 to 135 to the dollar?
Yes, I'm very comfortable with the reforms that we have put in place. As I came into office, I found there were quite a number of restrictions on the foreign exchange market. There were actually queues in terms of companies trying to get foreign exchange out of Kenya, and this brought a lot of uncertainty for foreign investors, and investor confidence was quite low. But the reforms that we've now implemented have really increased the depth of the foreign exchange market. We have introduced an electronic trading system, and other reforms. For example, even including the tenor for swaps for counterparties, especially external counterparties. We have reduced those tenors from 12 months to 6 months, and we've also reduced the transaction amount for the interbank market from $500,000 to $100,000, and this has really now livened up the interbank foreign exchange market. There's depth. There are no more queues for foreign investors queuing to get their foreign exchange out of Kenya. The system is flexible. We have a flexible exchange rate system. And so all those reforms that we have put in place have really borne fruit. And part of the reason why we have a stable exchange rate now is because of those reforms. And foreign investors know that they can come into the Kenyan economy and they can leave anytime, because the foreign exchange is available to leave whenever they want, and they don't need to queue for them to get the foreign exchange.
Right. I wonder, though, to what extent do you think that this relative stability we're seeing now in the Kenyan shilling, to some extent, might that also have been driven to that point, given the erosion that we're seeing in domestic demand and purchasing power? And the reason I'm saying that is because looking at the data that came out from the wage data in the economic survey of 2024, average real, inflation-adjusted wages last year fell under 700,000 shillings on an annual basis for the first time in around 5 years. So to some extent, domestic demand might have helped to essentially provide this stability.
Yeah, that's true. It may have, and we do know that the fact that inflation had been high, obviously that reduced real incomes and had an impact on reducing aggregate demand. Now, but that's part of the transition. I think now going forward, The fact that now that inflation is now at 5%, which is our target, the fact that now we expect the broadly all the sectors in the economy to do well, and as I said, also the manufacturing sector to perform better than it did last year. So we expect real incomes to increase, and therefore that should incentivize consumption. So we do expect consumer confidence to increase. And of course, later on, as we deal with the issues of fiscal consolidation and the fact that now inflation is going down and interest rates start to come down, we should also now expect later on the lower interest rates to give a boost to investments. But so generally, we do expect aggregate demand going forward to increase, and therefore to be part of the driver for the growth that I mentioned earlier
Right.
of 5.7 for this calendar year.
Indeed. We'll leave it there for the time being. Thank you very much for your time this evening. Dr. Kamau Thugge is the Governor of the Central Bank of Kenya. Of course, as I mentioned earlier, he's been attending the annual meetings of the African Development Bank.